Good morning. Welcome to Bazaar Morning Call. Here's wishing all our viewers a very, very happy new year. Hope this year is filled with everything that you desire, primarily health, followed by, of course, wealth, happiness, joy, prosperity, and all of that. From the entire team of CNBC-TV18, wishing all our viewers a happy new year. But joining me now is Latha Venkatesh and Nigel D'Souza as we kickstart a brand new week, a brand new day, and, of course, a brand new year. Folks, Happy New Year to both of you, to your families, and hope this one is the best one yet.
Oh, absolutely. We had a good one as far as stock markets were concerned last month. I mean, better than others. Even if we did only 4%, others did so much worse. Let's hope this year's better.
Absolutely. And welcome back.
Yeah, Happy New Year to both of you. It's good to be back. And, I had a really good holiday. And, Latha, wishing all our viewers a very, very Happy New Year. May this one be a prosperous one as well. And, in the last 2 weeks or so, I've been talking to a lot of market participants as well. But a lot of them said, we're talking about that 4%, but portfolios are not feeling like that 4% in that 18,000 odd mark. Yeah. So I just hope that 2023 is a year when maybe, in fact, retail portfolios start looking good. That means the broader markets start outperforming. So we'll talk about that in the show as well.
Only hope COVID and climate don't scare us.
Hope the animal spirits come back this year, right? But they haven't. I mean, the SGX Nifty this morning is indicating that we'll have a muted start. In fact, Friday as well, although it was a day of shortened trading in the US, you had weak cues. And we wrapped the year up with one of the worst years that the US has had since way back in 2008. So hoping that this is a better year, at least for global markets. The S&P 500 was down 20%. The NASDAQ was down over 33% in the year gone by. The Dow got by with less than a 10% loss. But the Nifty has been largely ranged between that 17,800 to 18,200 level. So far, it's holding on to both the 100 and the 200-day moving average. Let's see how the week shapes up. A lot of cues to talk about that. We'll do that, of course, in a bit. Today, the US markets are closed and most global markets are closed later in the day, so we won't really get any major cues, but lots to watch out for otherwise this month.
Oh, absolutely. But first, what the market will take away from last week, we have not had a great set of global cues on Friday. 3 negative cues, Wall Street ended lower, crude was higher, we don't like that combo, and bond yields were higher. In the US, there was some very good Chicago PMI numbers. Before that, the jobs data was good. So, that means the Fed will not stop. So the market's a little worried. Indian cues, actually, we got a bunch of data. We always do on the last day of the month, and this was last day of the year. Core sector, that came in at a good 5.4, but that's entirely base effect. If you looked internally, 6 out of the 8 sectors did very badly. But those 2 that have done well have done superbly well. Coal has done exceptionally well, and cement is up 28% year on year, and even month on month, it's a decent improvement. So maybe you could look at it as mixed. Fiscal data, there's one surprising thing that actually caught my breath, which is that corporate taxes collected in November were lower than what we did last year. That's a little, maybe it's a one-off. Therefore, the gross tax revenues for the month were also lower than what we had collected same month last year. However, fiscal deficit was excellent. I mean, it is 60% of full year. I'm saying excellent because that means the economy, the government is spending and the economy will spur. The other number that came from RBI, which was the Q4 borrowing of the states, that came in. They have said that the states are going to borrow 3.4 lakh crore. I don't think the market is prepared for that much. The numbers I heard on the street were more like 2.9, less than 3 lakh crore. So I wonder if that may have a slight negative impact on interest rate market today. And finally, of course, the big negative news I thought was the FPI sell number coming in at 3,000 crores was a bit rattling. I mean, we've had 3-digit sell numbers. This 4-digit and 3,000 crore was a shock. But I think the GST numbers were great, and auto sales, you tell me.
So it was a mixed bag this time around. I'm sure the street will react to it as well. Passenger vehicles, the small car guys like Maruti have been suffering. It's almost now a double-digit loss that they've seen. Maruti sales were down 9%. The small car segment got hit very bad. But what I really liked is that there was good growth in medium and heavy commercial vehicles and electric vehicles. In fact, Tata Motors commentary stood out for me where they said that fleet utilizations have gone up. There's a pickup in road construction. There is an increase in cement consumption. And that has led to a good recovery in medium and heavy commercial vehicles. So I'll watch out for that pocket very closely. And of course, there are a whole host of other cues to watch out for as well today. But for now, for starters, looks like the market is going to start in the red. Nigel, Nigel, what are you tracking?
Well, we were talking about Santa Claus rally. Santa never came, right, in December. We made all-time highs at the start of December, but we didn't get that big rally that we were anticipating. So we ended a little bit lower. But as we stated earlier, will 2023 belong to the broader markets? The small cap index has got rattled, and that's after a bit of a pullback. So it ended last year with a cut of around 15%. That's why portfolios are feeling like we're at around 16,500, around 17,000, rather than 18,000 plus. So I'll be tracking that very closely for the remainder of this year. And I think odds could favor broader market outperformance for this year. So let's see how that goes. In terms of Friday's recap, well, I was on vacation, but I tracked a couple of hours of trade. And we witnessed a sharp downtick, particularly in the final hour. But volumes, well, they were a pittance of what we normally see. Volumes much lower, and I think that's likely to be the trend for the next 3 to around 4 trading sessions. So you get a broader trend maybe by, Friday or thereabouts. The FI data, well, it's looking a little bit bearish in the F&O market in particular. They added some short positions, that's close to around 12,000 short contracts, and they wrote calls aggressively as well, in the ratio of close to around 4:1. And the long short positioning on the index itself is around 50% apiece. I'll tell you what, when you get some of these bearish cues coming in, it's actually a blessing in disguise, because there could be a big short covering bounce that could play out. What's the range you're looking at? Well, a 400-point range on the Nifty itself. So you just pull up a couple of those numbers out there. 17,850 to around 18,250. And the Nifty Bank as well. Basically, I'm working with the 2% range on both these two. And let's get further into that. On the Nifty levels, the 50 DMA, that becomes crucial on the upside. So maybe, in fact, if we get a bit of a bounce as well, I'm expecting some supply at those levels. While on the downside, we went and breached that 100 DMA in the last week of December. So that becomes a crucial support zone. On the Nifty Bank as well, the 20 and the 50 DMA become very crucial. We're closer to around, the 20 DMA right now. So maybe if you can get past that mark, then it'll be good news. Otherwise, on the downside, you're at around 42,500 odd. That's going to be important. SGX Nifty suggests a bit of a pullback. I think at some point of time that gets bought into. But still, volumes will be thin, so you could expect some bit of volatility.
Oh, generally, in the first week of Jan, people are sort of getting back to the office. They're still relaxing. So I guess volumes will start picking up second week. You said Santa didn't arrive on Dalal Street, right? I mean, it was there all over.
Yeah, all
but
over.
he missed that turn, that the exit to Dalal Street was missed on the highway.
I'm coming back from vacation. My kids are really small, so every day they ask me, has he come? where was he? So I'm scampering to put the gifts under the, under the tree.
They've done the red coat and kept their faith.
You should start doing that, next year onwards. Yeah. Papa's your Santa now, this year and every year, right?
Yes, is Santa. Okay.
But a couple of more things that I'm watching. There's also the US FOMC minutes that will be closely tracked this week. So do keep your eye out on that. Any indication of whether the Fed goes easy on rate hikes will be, sought out for after the FOMC minutes. And then we get full-fledged into earnings season. We start off with TCS on 9th of January, followed by all the IT numbers, HCL Tech, Infi, Wipro, and then the big banks. HDFC Bank comes through on 14th, followed by ICICI Bank on 21st. So lots to watch out for. But before we start the show, let me tell you what's lined up in the first half hour of the show today. We'll get you updates from the markets across the globe. Arvind Sanger of Geosphere Capital Management will be with us to discuss the global trade setup. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. At around 8:30, we'll do a fundamental stock analysis with Prakash Diwan as well. Okay, first up, on the equities front, we have a comment coming in from Aditya Suresh of Macquarie, who believes that it is far more likely that MSCI India sees a 10 to 15% correction rather than a 5% rally in 2023. He says India's earnings growth outperformance is more than priced in, macro momentum is waning, domestic flows are moderating, foreign flows remain soft, and we can use this pullback to add exposure to India, as the midterm outlook remains constructive. He says digitization, formalization, and the Make in India theme are a few mega trends. And he also talks about how their focus idea list includes HCL Tech, Indocin, Sun Pharma, GAIL, TVS Motor, and HDFC Bank that are an outperform. And Bajaj Finance, Reliance, Jubilant Foodworks, InfoEdge, and Concor are an underperform.
Okay. Well, a market is made of opposite views. So here's another one on the other side. Mahesh Nadurkar of Jefferies says India's economic outlook is robust, with FY24 GDP growth of 6%, driven by a housing upturn and improving corporate spending. He says domestic companies' earnings should grow around 15% for FY24 as input costs stabilize and the rate hike is now priced in. He says December 2023 Nifty target is 19,000. It offers only a limited upside due to valuation and potential corrections should be buying opportunities. Mahesh Nandurkar says they like banks, staples, property, industrials, and select autos. Underweight on IT telecom.
Okay, let's also try and tell you how to approach the money markets today. B. Prasanna of ICICI Bank says that the dollar retreated during the last week of the year owing to hawkish ECB commentary and optimism regarding the reopening of the Chinese economy. He says the rupee remained in a very narrow range as oil companies bought matched quarter-end exporters selling flows. He adds, ahead of the US jobs data, the dollar is expected to remain supported, and he expects the dollar-INR pair to trade in a range of 82.25 to 83 to the dollar.
Fair enough. And on bonds, B. Prasanna says global yields drifted higher amidst thin liquidity owing to continued risk of higher inflation from China opening up. Back home, he says yields were more stable as strong investor demand continues to provide key support, expects markets to remain range-bound with improving system liquidity, and he expects the 10-year benchmark bond yield to trade in a range of 7.2 to 7.4 in the near term.
Well, we have a lot of stock-specific action for you, and we'll get to that in just a bit. In our special Top 10 segment, we're looking at Tata Motors, NMDC, Coal India, Moil, Religare Enterprises, Torrent Palm, and Escorts Kubota. They are stocks on the back of positive news flow, while on the flip side, you have Maruti,